That's it, a look at the approach of President Bola Tinubu to easing access to capital and, of course, bringing about economic growth. And it seems that one way that the president thinks this can be done is by energizing, in his words, energizing the MSMEs. So we'll see how he does it. He assures us. So we hope to see that really soon. Well, let's still stay on this. Obviously, the economy is our business right here on Business Morning with Mr. Ayodiji Ebo. He's the Managing Director of Optimal by AfriInvest and joins us to talk about one of the issues mentioned there. Mr. Ebo, thank you so much for your time this morning.
Good morning. Thanks for having me.
So first of all, let's get your views, or at least one of your perspective on the issues raised in that report, which is empowering MSMEs. We've heard the president say he would prefer a single-digit interest rate, and one of the economists there said, well, it's not about pronouncement, it has to come over time. How real do you think a single-digit interest rate is in Nigeria?
Okay, thank you. I think it's almost impossible based on the current reality, because even for the banks, commercial banks, they are not a CSR organization. So by the time you factor in the cost of even doing business, and also you look at CRR factor, you look at some of the NDIC, the charges that they pay, when you look at that particular, the rates that will be charged, would always be higher than single digits. I think what can be done to support beyond the reducing the finance cost is the cost of doing business. The SMEs provide their power. If we can provide stable power, that will reduce the cost. Infrastructure, bottlenecks, transporting things takes a lot. If we can also reduce their cost, over time, that will filter into the cost of lending. Yeah, we know CBN has been providing support in the past years, but we've not been able to see or track it in terms of the efficiency or effectiveness of that. But if you channel what they have, the proportion is still very low, so it's more of looking at what are those factors that we can take care of to reduce the burden on SMEs. Is it through taxes too? Because if you also reduce taxes, if you cannot achieve reduction in interest rate and you can reduce taxes, maybe giving a bit of tax holiday, that would also support their sustainability, because it's more about sustainability of those businesses so that they can continue to produce, they can continue to employ people and be profitable. And you can charge the tax, charge that tax on a bigger business in the future.
And then also the issue of debt servicing obviously was also mentioned there, but these days there's a term called debt overhang. What's that?
Yeah, so it's more the burden. So when you check the parameters, two major basic variables, we look at debt to actual revenue and debt to GDP. So you look at debt to actual revenue based on the estimates from the Debt Management Office. I think about 2.1 trillion naira has been used to service debt, compared to about 3.2 budgeted. So when you compare that amount relative to the actual revenue, you would see that it's almost getting to about 70%. You look at it even now as a proportion of GDP, because of the securitization, it's almost at 40%, 40.5%, which is higher than the normal threshold. So it's important that when you look at those numbers, sustainability becomes a major concern. And the more we grow, looking at our debt numbers, which grew from 2022 from about 43 trillion to almost about 87 trillion because of the 27 trillion naira securitization, as well as the exchange rate differential. So it shows that most of our actual revenue, what will work for the amount of every naira we make that will be used for servicing debt, will continue to increase, which would crowd out the productive sector, which is capital expenditure. there will be no funds for that. And that is what we all benefit. We spoke about SME earlier. This is what will create an enabling environment for the SMEs.
So I mean, our debt now is about 87.38 trillion naira for the second quarter of this year. And there's also another conversation of how this is affecting the value of naira. We see the naira dropping, you know, at a very sad rate. Could you help us connect it and perhaps how we can get out of this hole?
Okay, so the way I would put it is that the devaluation of the naira is impacting on the value of our debt. So when you look at it as at Q1, the exchange rate at the official window was at 440. And as at Q2, when you're going to value our dollar debt, which is about 39% of the total debt, increased significantly. So on the quarter-on-quarter basis, increased by about 46% from last year. That's from December 2022 to Q2 2023. But you look at it in dollar terms, we increased by just about 9.8% to about $113 billion. So that element of the adjustment of the naira impacted on our naira debt. So I increased the value significantly.
So I guess that's also happened because I think 2 days ago we did see that headline in a lot of papers that the CBN has defaulted in paying commercial banks, and then of course it has to do with FX.
No, I don't think in terms of default on our naira debt, because we have control over the naira, it is almost unlikely that we will default. We can default on that. The worst case is to print money to pay or roll over. So I don't see any major concern regarding our ability to continue to service our debt. You know, like I mentioned earlier, yes, there may be concern around what is left for capital expenditure, but because these debts, we need to uphold that sustainability, debt sustainability, we have to continue to serve it. Where we would have concern, or we may want to have concern around, is the euro bonds. But when you also look at it, total euro bonds as a Q2 is around $15.6 billion. And when you look at the amount, you do the maturity analysis, it's sustainable when you look at the interest we'll be paying on an annual basis. It's less than, I think, maybe $1 to $2 billion. So, and we still earn dollars. So I don't see any major threat, any major concern in terms of servicing our debt. The major concern now is that we are not earning enough. And we still need to borrow. But now we need to, the borrowing must be more strategic around productive areas that will yield that positive return for us to be able to pay in the future.
So still talking about borrow, of course, we have to continue servicing even that which we have borrowed before now. And by now, I'm sure it's about 100% of our revenue being used for it. Is there any urgent thing or something and a different approach that this administration can do when it comes to the issue of servicing our debts and, you know, helping the economy?
Okay, thanks. I think what if we are able to at least first stabilize the economy? We can ask for maybe forgiveness. You look at the multilateral loans. I'm not talking about euro bonds because that's commercial loans. You look at the multilateral loans and you see whether you can have a bit of restructuring. And when I say restructuring, if you increase the maturity and maybe get some you get some interest break for a certain period. And part of what I think we also need, you mentioned FX earlier, we still need to see how we can access multilateral to provide FX liquidity for us. We know what the backlog is, and we need that dollar to first clear backlogs to a large extent while we are providing confidence to attract foreign portfolio investors, foreign direct investors into the country before we begin to see a bit of stability.
Yeah, but
it seems
that the bigger and long-lasting solution would be for Nigeria to improve its exports at the end of the day.
Right. Yeah, you're spot on. It's a long term. So you know, when there's a problem, you look at how do you want to solve it in the immediate while you diversify your export base from oil, which will not come overnight. I'll put it at medium to long term. So we export. You look at manufacturing and agri still account for less than 10% of our total exports. Can we support? These are where maybe CBN can support them with loan, we structure that sector so that we increase what we export and we earn more dollars. Also, it's important for us to also create liquidity. The spread, which we're all concerned about, has returned between the official window and the parallel market. So that will be a disincentive for importers to bring in their FX proceeds to the official window, as well as dollar remittances. So if we also don't solve that problem, then we'll just be throwing money at the problem. Even if we raise $10 billion from the Eurobond market, as long as there's a spread, we will not be attracting that liquidity from the export proceeds as well as diaspora remittances into the official window.
All right, Mr. Ayodeji Abel, thank you so much for sharing your thoughts with us this morning, Managing Director of Optimus by AfriInvest.
Thanks for having me. Always my pleasure.